Hello everyone, thank you first for that very glowing introduction. So I'm really honoured to chair this discussion today. Before we begin, I'm just going to give you a little overview of what to expect from today's talk and also just some practical guides as to how to ask questions. So the way it's going to work, we're going to have about a 30-minute panel discussion between the three of us, although mainly led by Martin and Andrew, who I'll introduce you to in a minute. And then we're going to have about 10 to 15-minute Q&A at the end. Now, my understanding, the way for you to ask questions, you need to go to your Barella app. I'm hopeful you all know what that is. And you need to go to the bottom of the toolbar, click on the three dots, and then there is a Q&A function there. So just any questions that you have, please put them in. I'm reliably informed they will appear on my iPad, so I can ask the panel of them. So just a little bit about our speakers today. First of all, I'm joined by Andrew Jackson. He is the head of the anti-money laundering department at the Bank of Baroda. Andrew is a financial crime compliance professional and is considered an expert in anti-money laundering and financial sanctions compliance with over 20 years experience. We also have Martin Schimment, who is the Vice President of IDET at RegTech FinTech Systems. I understand some of you may have already met him this morning as he already did a presentation, but just for those that haven't had the opportunity to meet Martin yet, after starting his professional career within the core team of Payment Network AG, he successfully built up the inside sales team at Sofort AG. After merging with Klarna, he held the position of Director Commercial Operations as part of the management board at Klarna. In 2016, he joined the management and founding team of FinTech Systems, being responsible for the entire market operations, and Martin currently leads the business unit of FinTech Systems. So today, as you obviously heard from the introduction, we're going to be talking about AML, fraud and financial crime. Now, all of you here today, that's probably commonplace and it's part of your day-to-day business. So one of the first questions that I've got for our distinguished panel today is, what are some of the largest compliance challenges that you face at the moment?
So I think for me, the biggest challenge is the regulatory workload, so the pace of change and demand in regulation. So, as a AML head, I have a strategy for the bank that I want to apply. I'm thinking about the risks that the bank faces and, what controls I need to put in place and improve. And yet the regulators are constantly coming out with extra advice, extra expectations. The number of regulations that are being enacted, it's constant. So, the challenge is not being blown too far off course in terms of the strategy that you want to adopt.
And Martin, what about you? What difficulties are you facing at the moment?
Thinking about a couple of challenges. I don't know. I'm coming a little bit more from a market perspective, especially when you think of identity fraud. Taking a look at the COVID-19 crisis, started also in Germany last year. We had a lot of fraud during applications for public state subsidies, where money went to the wrong hands. And they could have avoided that by just using modern technology to identify the person better. So I would say the challenge is a lack of the usage of proper technology to handle huge numbers of applications in a secure way and also within a modern customer experience. That's, I think, one major thing, one challenge for legacy systems, especially also in Germany, where there is kind of a resistance to modern technology. At least it appears like this. Second thing is what you also mentioned, Andrew. With a lot of fraud, there is a lot of regulation coming in, and regulatory requirements, increasing costs for companies. That's the second thing, so as a challenge. And the third thing I would say is knowing your own requirement, what you need to comply with, and finding the proper partner to do with. Because take a looking at all these regtechs out there, everyone is telling we are doing KYC, transaction monitoring, this and that. So I don't have a clue what's the difference between all these providers. So I think it's very hard for companies to know the proper provider for their requirements.
Yeah, I mean, I think that's quite an interesting point. Coming at it from a legal perspective, when we are advising kind of non-contentious matters about how to implement AML and CFT compliance programs, we often say, we would encourage you to use a third-party provider. But that's probably as far as my advice goes, because I can't then be seen to kind of prefer a different company, for example. But the question that comes back is, well, which one? And I can't straightly answer that, because with any company or in any entity, public, private, whatever it is, the requirements are different. And so I think what RegTechs want to think about, but also anyone that's looking to implement AML policies, is to think about your client base and what are the sources of information that you think you can obtain, because really you've got to apply it to what your company is doing rather than just doing a blanket tick boxing exercise.
Right.
I think that's absolutely right, and I think again, coming from my experience of the medium to smaller banks, the kind of secondary banking market, typically what you see are firms that are quite long established. They may have legacy systems, as you mentioned, Martin. If they're a subsidiary of a larger group, that they may have a dependency on group solutions. And I think, inevitably, funding investment is very, very tight. So I think, for me, the advice is, you need to look to your enterprise-wide risk assessment. You've got to be really accurate and detailed on identifying the particular risks that your institution or your firm faces, and then think about, right, what do I need in terms of technology? And I think also, you pay attention to what the regulators are saying. Here in the UK, the FCA, I think their clear message is they expect firms to take advantage of technology. I was looking at the FCA have conducted a review of the annual Rep Crim return, which is a real joy, to have to fill in every year. And they've done some really useful analysis. And what really struck me when I was reading that, in the preamble, they say, the FCA, we are using data and advanced analytics to transform the way that they regulate. So if you're a firm and you're paying attention to that, what is that telling you? You need to do that. You need to think about how we can take advantage of technology to fight financial crime. It may not be that you can go out and buy something off the shelf, but certainly, for me, the first starting point is, how can I leverage the systems, the applications that we already have within the bank? And then if that doesn't do it, then you really do then have to go out into the market and identify those solutions that really work for you.
But I think the problem then is, well, what is the right technology and how do you prove its efficiency? I mean, Martin, perhaps you can shed some light on that.
Well, the right technology in my eyes is that you don't react on something that has happened already, but you kind of proactively prevent something to happen, like fraud. So to be honest, I've already presented today one technology that could help, open banking, which has a direct access to the bank data. And why is it so important, or why is it so interesting? Because within a bank account, you have almost everything you need to evaluate a person's identity, a person's financial background. So the problem is that I've use that phrase. I don't know if there is a similar phrase in English, but the problem on the market is that the worm needs to be tasty for the fish and not for the fisherman, but that perception is always different, or very often different in companies. So they refuse to take these technologies in order to prevent fraud rather than reacting.
So I suppose then the position is that people tend to just view AML as part of the compliance process, whereas you need to globally take a step back and think, well, what is the purpose of our AML and the CFT? And it is to prevent crime. So I suppose it's being innovative rather than being reactionary. But I think, the scale of the problem, I think, obviously, Andrew, you'll probably always comment on this, but when you are a smaller scale, a tier 3 or a tier 2 financial institution, for example, you may not necessarily have the financial resources to invest in such technology. So what do you do then?
So I think what you do is you do your best to persuade the CEO and the COO to stump up some money. But no, seriously, I think it goes back to the point about the risk assessment and how rigorous and accurate that is. And going back to Martin's point about the pandemic and the way that's transformed, particularly cyber-enabled fraud, and thinking about how does that impact my customer base? How is that going to be actually manifested in the way our customers behave, the way our customers transact? And then you've also got to think, well, look, we're coming out of the pandemic, so the criminals are going to change again. So you do need to be seriously thinking forward. I think, let me nail my colours to the mast. I think for me, it is things like automated transaction monitoring solutions, the things that will spot the money laundering, the fraud happening in the transactions that your bank is processing on a daily basis, and also screening solutions. And again, I'll go back to the FCA's Rep Crim analysis. So they were talking about sanction screening. So they've seen over a 3-year period a 16.5% increase in the number of firms that use automated screening solutions. So, but what they also say is the investment management sector has the lowest incidence of screening technology. So what that means is that somebody who's taking on a new investment management client has got to manually, go on a website or go to the OFAC list or the HMT, the OFSI list and do a manual search. Now, to me, if you're a firm and you've got, say, more than 1,000 clients, why would you not use an automated transaction monitoring system or a sanction screening solution? Because that is going to put you in a much better position to identify a potential sanctions breach or potential money laundering much faster than you're ever going to do it, kind of trying to do it manually.
I think your point is interesting about the investment, because my understanding, because I also looked at that report, was that they are also represented a third of those that reported in. So 1/3 of those that reported in don't have the automated systems in place, which seems absurd given that the FCA's guidance and everything suggesting is leaning towards that. Now, I'm going to be a bit of a devil's advocate here and suggest, well, is that enough? And actually, from somebody who represents a lot of the criminals that then find themselves being caught, actually, those that are not so sophisticated will do a transaction that triggers an alert and is an anomaly. But if they are really truly sophisticated and they understand that, the rules and the anomalies that are in place that are programmed into these monitoring systems are well learned. So what they do is simply do a transaction that doesn't trigger that alert. So then my argument then is, well, you're not really preventing that. All you're doing is identifying those that are perhaps not as sophisticated, and you're not really catching those that are well versed at doing it. Because, and I don't know, therefore, whether I think the automated systems in and of itself is enough. And as both of you will know, that is just a start. So you get thousands of alerts, but then you have to have a team, a manual team, go through and have to look through and see whether they are false positives or not.
Right.
Martin, what's your view on the systems and whether or not you think they go far enough in preventing crime?
Well, to be honest, for me, the picture of Google Maps pops up because finding a location, you can take out your paper map and calculate the best route to it and see, okay, how do I get as fast as possible there, or you just type it in on Google Maps because they have a lot of data points they use in real time and give you the best direction to it, and it tells you on the way what restaurants you can visit and what other things are. I mean, you get my picture. So I'm always in favor of having technology doing it with a manual supervision, of course, but a computer is always faster than doing such amounts of big data. And talking about big data, I mean, big data was a buzzword, I don't know, 3, 4, 5 years ago. I'm more in favor of smart data. So connecting big data, interpret it, take the right decisions, and have a real meaningful reports out of that, and then talking about smart data instead of big data. Because big data is nothing worth, I mean, it's not valuable if you don't take the appropriate measurements out of it. Does that answer your question?
Sort of. I mean, I think what you're saying is that there are different levels of technology. So you've got the ones that just process huge amounts of data, but they don't have this smart aspect to it. And then you can obviously get far more sophisticated forms of technology. But I'm still not convinced, at least from my perspective, that they are enough. I think they are definitely a starting point. And the FCA has clearly indicated and alluded towards the fact that that's what they expect as a bare minimum. But I think we need to go further. If we really want to prevent money laundering and we want to prevent counter-terrorism funding, then there's more things that need to be done. I mean, Andrew, this is not a question that appears here, but just, as the conversation is flowing, what, in your view, what more do you think could be done? And what do you do in your bank, not just the automated systems, but what else do you do?
So, I think there's an awful lot to be done. And just going back to Martin's first point, I think when you look at, say, for example, the volume of suspicious activity reports in the UK, that's gone up, according to the FCA, from 394,000 reports annually, and in 3 years it's gone up to 480,000 reports. So, that's all, and the thing is, that's generated by 4 or 5 large UK banking institutions, and their systems very often are predicated on the old idea of rules, thresholds and parameters that, as you say, the smart criminals will know what they are and know how to get around them. So I think, again, kind of picking up on Martin's theme, one thing that really interests me and something that we are exploring is the idea of link analysis. So it's actually it's a more intelligence-led approach. So you look at the counterparties, the parties to transactions. You look at customers in your customer base that on the face of it might not be connected, but actually when you do that and you use technology to do that further research, you start seeing connections, maybe by location, maybe by the types of businesses that they're doing and the people that they're involved in. So all of a sudden you start identifying networks. And, ultimately that's how financial criminals operate. They work through networks. So, I think anything that can identify those kind of links is a really important way of improving the situation. But I go back to the kind of first point that if you are a financial institution in the UK, if you are a smaller institution, do not think you can get away with manual solutions. You've got to go and think very, very seriously about obtaining the investment that you need to adopt technology. And at the very least, think very seriously about what you can use, what tools that you've already got at your disposal to improve the situation.
So we're in a scenario where I think, generally speaking, some form of automated system is going to be the way forward. But I mean, what are the challenges that business face in implementing those? So obviously you've touched upon having the resources to having the funding, but what other practical challenges are there?
Well, of course, legacy systems, lack of resources to implement them, especially doing sales in that industry or in that area. You need to deal with the long sales cycles, because it's not about contracting the parties or the companies, it's about implementing and using it properly, right? So that would be my point. So lack of resources and lack of implementation and lack of proper usage.
As I say, so training is probably quite a key issue, because you can have all the systems in place, but if you don't know how to operate them...
You always need to be a tech provider and a consultancy at the same time.
You've got to be a decent human being as well.
Yeah.
So, and what do I mean by that? I think about the implementations I've been involved in, and I have to say, the successful ones have been where, it doesn't matter whether you're the customer, i.e. the bank, or the head of compliance, or the head of the operations team, or the IT team, or the vendor themselves. If all those parties can gel on a human level, and really want to get this done and make a success of it, and you have some fun doing it, and you have some arguments about it, and our data quality is absolute rubbish, what are you going to do? All of those things, that kind of tension and that drive, that's for me that's when you get success in implementations. The number of times I've sat through presentations from technology vendors, and they've simply not understood the briefing that you've given them about what your challenges are and how your bank operates. That's the thing. You go to the firms that that you can work with.
What are the regulators doing? So obviously, I agree, I think partnership is obviously a key thing, but you have to work with everyone within the industry. But that obviously also goes to the regulators themselves. I mean, from both of your perspectives, and obviously in different jurisdictions as well, I mean, do you think they're doing anything to help?
Well, I would say the more appropriate question is what they are not doing. Starting with what they are doing, they are definitely coming up with standards, directives, regulations, and things like that, which is a good thing, necessary but unpleasant. What they are not doing, they are, in my opinion, they have no interest in about the capabilities of technology, what technology can do to get an exchange with the market, with the fintechs, with the banks, to bring in on the table to discuss, okay, how can we prevent beforehand and not react afterwards? That would be my answer to that.
And Andrew, what's your view?
So I think, my experience of particularly UK regulators, when you speak to them on a one-to-one basis, they're invariably very supportive and helpful. But then you look at, I'm thinking about the 3 or 4 dear CEO letters that have been issued recently, and I just wonder sometimes whether, to Martin's point, sometimes it feels reactive. So they tend to talk about the deficiencies, the failings that we've seen in our visits to various banks, and I'm thinking about the letter that went to the retail banks in May, where they talked about failures in customer risk assessment, they talked about failures in business-wide risk assessments, they talked about failures in AML compliance people not understanding the technology and being too ready to accept group solutions and not thinking through the UK business context and the UK regulatory environment. So, what does that mean? You read that report, you think, are we doing that in our bank? Are we getting this wrong? So, sometimes what it does, it throws your confidence. And I think if we're ever going to get on top of financial crime compliance, we need to be more confident. We need to be more confident in our abilities. We need to recognise when things are being done properly and successes are being achieved. And that's where I think sometimes the regulators don't quite get that. We want to hear more about what actually works.
I mean, I think your point about confidence is quite interesting, and actually, if anything, some of the action that's been taken in the UK, at least in recent months, sort of goes against that. So I'm sure most of you would know, obviously NatWest pleaded guilty last week to breaches of anti-money laundering requirements, and Monzo are also currently under investigation. So if anything, what they're doing is saying, if you do it wrong, we're going to go after you. That's not offering the support that you need. And I think they've made a rod for their own back, if I'm honest. They're trying to send a message that this sort of behaviour won't be tolerated. It's the NatWest is the first prosecution the FCA brought. They've had these powers for a while. They've only now decided to utilise them. I think NatWest is one of many, and several others will follow. But is that helping? All you're really doing is punishing those that have already done the action. What you really want to do is start beforehand. Going back to Martin's point, prevent. And I don't think the regulators have quite grappled with that yet. I think it's almost, if we send out this message that it won't be tolerated, then all the other institutions will implement these changes. But actually, if they're trying and they're just not doing it right, what they need is a supportive regulator. And I think then that goes down to lack of funding, lack of resources. I mean, I know we were just discussing before we came on about how all of the regulators are so under-resourced and take months or even years to do anything, and they can't criticise them entirely. There are financial constraints, there's a lot going on, but I think if we really want to overhaul this system, then we need to start putting some funding into them. Another point, and an interesting one, is about working together more closely. So I know we have this task force in the UK. I know in Europe you've got the European Prosecution Office, which the idea is that you unify things a little bit more. But I still think there is fragmentation between all the different institutions. And so I think if we could work together a bit more with the regulators in both private and public, hopefully might do a little bit more. So I'm a little bit sceptical of what the regulators are doing, and it's
I mean, a good point. I mean, take a look, PSD2 in Europe. It's a Europe-wide regulation, and we talked about it just before. Yeah. And every country interpreted the PSD2 differently. So even if it's a EU-wide regulation, every country is doing it kind of how they are willing themselves. And that makes it difficult to live it on a European landscape.
Yeah, and I think actually Brexit has a lot to answer for, but one of the problems we have now, obviously, is the fact that we don't have to, in the UK, adhere to any form of money laundering directives that follow. So we didn't obviously impose the 6th money laundering directive. Anything that follows thereafter, we don't have to do it. So if anything, we're going to be even more disjointed from our EU member. I'll say member states, not even member states anymore, but our fellow EU countries. So in a way, that's going to be a problem. I mean, one of the questions we have here is with the 6th money laundering directive, is it enough? And obviously from a UK side, I can say, well, we didn't even implement it. So that means, I mean, Martin, from your side of things, do you think that the 6th money laundering directive has done enough in Europe to help, or?
Well, at least it's adding more industries into the entire money laundering prevention, right? Real estate, jewelry, things like that, which was not there before. So that's a good thing. However, I think preventing money laundering is a moving target. So it's changing all the time. Every fraudster has their own business case. There are, like, if you remember to my presentation, the hedgehogs, smart ones, playing a little bit unfair on the market. So I just see it as a moving target, and coming from or being a sporty person after the directive is before the directive.
Yeah, and I think just to kind of sum up before we move on to questions, any directive, or whether it's a change in legislation, which we're looking at here, well, there's a call for evidence in the UK at the moment, it's backward looking. And I think the reality is you can't do that. You can't constantly be reactionary to what is happening. What you need to do is work with everyone within the sphere who are dealing with AML, KYC compliance on a daily basis, and really looking at the crimes that are happening and trying to get ahead of them. Now, obviously that's a lot easier said than done, but I think that's what we need to do. So yeah, I'm just conscious of time. We've got about 10 minutes left, just short of. So I'm going to move on to questions. I can only see 2 at the moment. So if anyone in this audience does have any other questions, please do use the Varela app so that I can ask them of the panel. So the first question I have here, I'll put it to both of you, and then obviously either one can answer. So do some firms meet the minimum standards for AML compliance rather than proactively trying to stamp it out? And should they take a driving position in tackling the issues?
Do you want me to take that on?
Yeah, if you're comfortable too.
Yeah, so I'll have a go. So I think, look, it's always a mistake to just aim for the minimum regulatory standards, because clearly if you fall below that, you're going to be breaching the regulations, potentially breaking the law. So I think, clearly it makes sense to make sure that your things like your risk appetite, your policies, your procedures aim to do more than the minimum regulatory standards. Now that's easier said than done, and you've got to be very conscious of you're running a business, and what compliance very often gets the label of being the business prevention department, and that's not what we're about at all. What we want to do is do business in a safe way and keep the financial criminals away from the institution. So, you've got to work. I think you've got to work with your frontline staff who understand customers and try and make sure that you're pitching policies and procedures in a way that they can, number one, understand and can actually implement.
And Martin, what have you got any views on that?
Well, I totally agree with Andrew. For us, since we depend on the user interaction, especially in our industry where they need to log into their bank account, we really need to consider the customer experience, so that on the one side, AML prevention can be done, but not at the cost of the customer experience. That's important for us at least.
No, and I think that's really an important point. From a legal standpoint, we would always say doing the bare minimum is really just the starting point. And you always need to do a little bit more. But I do understand that often conflicts with your client base. I know just from a cryptocurrency perspective or crypto asset perspective, we've been advising a lot of startups, and our starting point is you have to have appropriate KYC and AML checks in there. And their vision is, I want to have the bare minimum, because the very nature of crypto, the why people invest in it in the first place, is because of the anonymity that it offers, and so they don't then want to be incentivized by having to put in. So it's a difficult position to be in, I think.
I give you another example. Asking for the customer for logging into with his credentials, a consultancy, a legal consultancy, they really recommended us to ask for 3 checkboxes to get the customer check 3 times in a user journey. And our point was, that's not good for the user experience. We need to do it within 1 checkbox, and it's fine. Yeah, so we are complying with the GDPR. Customer experience is quite okay, but that's the way we are seeing it. So we don't need to follow we can hear the consultancies, the legal consultancies, but we need to interpret, okay, what's good for the customer as well. So maybe this helps, that example with the 3 checkboxes, where you would be very fine, legal-wise, but not from a customer perspective.
Yeah. You've got to draw a line. I mean, that kind of brings on quite nicely to the second question. It's talking about trust that customers have. So with some of the kind of large-scale money laundering scandals that are kind of worldwide and globally, what they say is, does that impact in the trust that customers have in financial institutions? And do we think there's going to be a move towards more FinTech companies? And what's your view? I mean, do you think there will be this shift?
I think inevitably there will be, and that's no bad thing, is it? Because, you know, one thing the regulators, particularly in the UK, are looking for now are good outcomes for customers. So, and I was thinking about it on the way here, you know, catching the tube at Waterloo and City Line and watching the people go up on the escalator, you know, and it's great to see everybody coming back into the city. But and I'm, you know, thinking, well, actually, how many of these people are financial criminals, right? You know, the vast majority of customers are ordinary people like you and me, and we want to be able to pay our bills. We want to be able to pay for our holidays. We want to do that in a way that is easy and uncomplicated. And, you know, I think that's what the financial institutions really need to play to. You know, the vast majority of customers aren't criminals. Let's please hang on to that. But what we've got to do is get on to the ones that are and stop them using the system.
And Martin, what's your view? Do you think there will be this shift?
Yeah, I'm with Andrew with the convenience factor. I'm not within the trust argumentation. Okay. If you have a customer that can decide between a FinTech or a provider, let's take a loan application, yeah? He decides to apply where it's more convenient in terms of the customer journey, where the application or to get the loan granted within seconds or minutes, or he decides to go to a huge banks where he knows, okay, the application takes weeks or let's say days. Sorry, Andrew, not at your bank. But my feeling is that the customer will decide to go with the convenient flow. Yeah.
Yeah, I think that's a really interesting point. So I suppose it's not so much as a lack of trust, but if we are going to implement these sorts of processes, then it needs to be more streamlined. And so if technology can aid traditional financial institutions in doing that, then that's really the way to adopt it. Moving on then to our next question that we have. I've got quite a few, so I'm going to have to be selective just because of we're limited on time. So I think this is quite an interesting one. So they say financial crime continues to increase, and the most vulnerable people tend to be older adults. How do you think you can raise awareness? How do you raise awareness? So how do you make the most vulnerable people in society, those most susceptible to the fraud, become live to it?
So I think in the UK banks are taking this seriously. You know, there are a number of initiatives out there. I'm thinking of the UK Finance Take 5 campaign, and you know, you look at some of that material and you think, yeah, that's absolutely spot on. And we've got to do more education, and we've got to increase awareness. But sometimes, you know, people do silly things, don't they? Sometimes you can't help people who, sometimes act impulsively.
Yeah, I mean, and this is just, you know, when you're going through making a transaction now on your phones, there's this automated alert that comes out saying, do you know who this person is at the other end? And I can pretty confidently say I probably will tick yes even if I didn't, because it's just, I want to get through to make the payment. So I don't know, there's raising awareness, but then you've got to do more than just, you know, the banks raise awareness in one hand, but then also protect themselves in another with this kind of tick boxing exercise. I don't think education in and itself is enough. It's definitely the right way forward. But I think, again, it goes to prevention. I mean, Martin, do you have any views on this?
I wouldn't say it like for education. I would more go for transparency, why you as a customer are rejected within a loan application or a BNPL flow or whatever business you do or action you take. I think the customers are want more transparency, explainability. What's the reason? What's behind the score? Yeah, and I think that's what we will see in the future more from RegTechs, explaining more what's the reasons for being rejected.
Yeah, I mean, I think that conflicts slightly with, so if you do have a SAR, as Andrew and Martin probably will know, you can't then disclose that to the customer. So transparency, I think, is important, but in practice, whether you can do that, I'm not sure. So we've got, I'm afraid we've run out of time. I've got a clock that's flashing at me down there. It's been an absolute pleasure, Andrew and Martin, to hear your insights. And thank you to the audience for listening to us for the best part of 45 minutes. I understand Andrew has to run off, but if you do have any questions for Martin or myself, I think we'll be hanging around just for a little while. So thank you very much.
Thank you.